morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Markets in Asia were nervous on Wednesday's session as China returned from its extended weekend break to post losses as the deterioration between the US and China's relationship caused investors to worry. Oil prices remain steady on hopes that easing of lockdown in many areas will see demand pick up, and futures in the US and Europe looked for a positive open later today. Markets have been buoyed over the last few weeks as governments get to ease lockdown measures and release strategies to reopen businesses. Earnings and economic data will be in focus today as European PMIs and the private sector jobs reading out of the US will take the headlines. Services PMI will be released from a number of European nations as well as the Eurozone as a whole this morning. And if the UK's reading was anything to go by, we could be in store for a dire reading. The service sector is incredibly important to many of these European economies. However, with the population on lockdown and many businesses closed, we can't be surprised by such poor readings. Yesterday's UK reading saw the pound and the FTSE 100 fall on the announcement. The headline will be the US ADP payroll, which is due for release this afternoon. This number can be seen as a precursor to the non-farm payroll reading that we will get a little bit later in the week on Friday. Again, expectations are for a dire reading to be announced, with the number expected to fall by anywhere between 20 to 30 million. The weekly initial jobless claims have painted a worrying picture already about the US employment market, showing that over 30 million Americans have claimed unemployment benefit in the last 6 weeks. Any economic recovery is reliant on a swift uptick in employment. So all of the job numbers this week will be closely watched by both the Federal Reserve and the White House. Both have already pledged trillions of dollars to help the economy. The other worrying aspect of the jobs report will soon be the wages picture. Average hourly earnings have currently been holding steady for those who remain employed at 3.1%. However, a drop in this number would severely affect the economic recovery. The economy is going to be reliant on those that still remain employed spending once the lockdown eases and businesses are up and running. The Fed have already lowered interest payments for many people, but a drop in wages would be equally as damaging to any broad-based recovery. Elsewhere, we get earnings from US challenger brands Lyft and Peloton. This comes after Disney earnings fell by 41% after the company announced that income was affected by the closure of its hotels, theme parks and cruise ships. However, there was some good news surrounding the company's new streaming service, which now has more than 54.4 million subscribers, making it Netflix's closest competitor.